The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's make some money. First, by not losing money. I have to say that part. That's my bear market addendum. Okay. Get my chart set up here for what I want to throw down with today. Let's see. Let's talk a little bit about this update from yesterday. Looking at the, of course, the S&P 500. And of course, again, I talk about this. I focus on this because everyone's retirement account pretty much is this particular symbol, which is the S&P 500, which contains the 500 largest companies by market cap traded in the U.S. stock market. By market cap, what market cap means is, let's see, how can I put that? The 500 companies that have attracted the largest amount of investable dollars. So if you were to list the companies that has attracted more investment, more of our money is invested in these 500 than any others. So that's what that means when you hear people say largest by market cap. So you have the 500 largest, then you have there's a group after that. It's called the mid caps. Then the 2,000 smallest. That's your small caps, and that includes your penny stocks and stuff like that. All right, got that out the way. Just right off the top, I have a volume graph up here. I usually don't trade volume, but it's useful information. But you know, I like to gotta draw the line somewhere. You can get information overload with all these charts and graphs and stuff. But this one is jumping right off the page and letting you know that since this uptrend began, I'm looking in this information box here that jumps around. Right around Christmas Eve a year ago. That's the trend that we're in right now. So we're in a year into this trend. So it's been going pretty good. You see on the bottom graph with volume, the volume is going down. So that means fewer people are trading, or fewer transactions are going in and out of this fund over that year. So although we've reached all-time highs, the market was skeptical of it the entire time. So that's two things. One, it shows you that, and this is called divergence, where price goes one direction and say volume or momentum goes another direction. So you're getting, you know, in a healthy situation, you would prefer to see the momentum and the price, or volume in this case, and the price track the same way. So that's one thing. Well, that's note that. Second thing to know is volume. Divergence. This divergent state can last a long time. So we don't just abandon a trade just because there's divergence, but we do pay attention. We do exercise some caution. It's sort of like the stock market is a kind of auction. So you can kind of think of it as, you know how you see in the beginning of an auction, you might have a large number of people throwing their paddle up in the air and they're interested in a particular thing. That would be here. And over time, you end up with just the 2 or 3 richest people in the room, and then they get into an ego battle of who's going to walk away with that ugly painting. Okay, and, it's like they bidded the the price way above the value of the thing. So you have a small number of people determining what is market value. Market value is just what something sells for at any particular time. But as this divergence shows, a small number of people can can determine market value, and that may not be uh, sustainable. The price that such a small or diminishing number have determined its market value, it may not be sustainable if that small number of people don't keep bidding it higher. So you kind of need volume or the masses to step in at some point to say, okay, it's fallen enough, it's a value at this price, and we'll buy some of that right now. So that's what's really gonna that's what's necessary to catch this market, because we have a diminished volume or number of participants who have decided that even at this price, they don't even want it. Okay. So somebody's got to give this market some love, or it's going to keep falling. We call this a falling knife. Okay. It's taken after your kitchen mistake. If you're in the kitchen and you drop the knife off the counter, you're barefoot in the kitchen. Are you going to try to catch that knife, or are you going to jump back and get your feet out the way? So instinctively, we know not to try to catch a falling knife. So that's the meaning of that saying. If I was to say some good news about this chart, let me go with the bad news first. Go with the bad news first, but I'm going to be objective. Try to be objective, because again, as a trader, a technical trader, we don't care whether the market is going up or down. We just want to be on the side of the trend. So we are always struggling for objectivity, because we can really make money either way. We just have to make up our mind or see clearly what the market is doing, and have the confidence, and the skill, the training, and the confidence to act on what we have learned. Okay, so it should be easy. I mean, you're standing here looking at easy money, but sometimes just pressing that button to short the market is a hard thing. But we have a hammer candlestick here, and that's pretty positive. But we also have what we call a gap, where you have you notice a lot of these candlesticks are close together. One may even overlap the other one slightly. The price of this one may come down into the territory of this previous one. Well, this one has a big gap between the bottom of this one and the top of that one, and that's called a gap. All right. So then we got this hammer here, which is a bullish sign. Now, yesterday we talked about, I said it could be an issue if the price dropped below this level, which is like support here, and then this level is functioning as resistance here. Okay, so the price came above this resistance, and that resistance became support. Then we made this high, and then we gapped down below it. So many times what happens, the price will rise to fill the gap. We call that filling the gap, and then continue going down. So will that happen this time? There's nothing to say that it can't fill the gap and go higher, but I doubt it because this momentum indicator is pointing down, and we are in a deeply overbought state. So just to there's a thing called reversion to the mean, where when prices get to be too high, they have to come down to a more average level, more affordable level. So I believe that's got to happen. I don't think 3 days Friday, Monday, and then today is enough. Now my screen, my daggone, and this thing is all right. Come on, computer. There you go. All right. I don't think 3 days is enough to end in this dive, this falling knife. But I'm pointing this out because we could very well get tomorrow being Wednesday, hump day, Wednesday, and maybe even into Thursday morning. We could see some strength. The tell will be Friday. Friday being the end of the week. In volatile markets like this, where let me just say this, in general, on a Friday, when people are feeling optimistic, they leave their money in the market over the weekend with the expectation that the price will rise higher on Monday. But in fearful environments, people don't trust leaving their money. When I say people, I'm talking about experienced traders, like institutional traders, folks that control millions, if not billions. They don't feel confident to leave their money in the market over the weekend because it could open up lower on Monday. They could be under water on Monday without any chance to have prevented that loss. So the tell is going to be how we trade on Monday. If big money considers this a value and they are overcome with greed and wanting to participate in the upside, or if they are filled with fear and decide that they just can't risk sitting in the market over the weekend. So we will be able to tell the psychology or the sentiment of the market by watching what people actually do. So that's why I love technical analysis, because I don't need a headline. It's just like, show me the money. Let's see what you do. We'll all see what you do. Put your money where your mouth is. So either they're going to love this market higher, or they're going to stay out and let it die. Okay, so that will be clear on Friday. Now, as for today, I wanted to give you guys just a little rundown of what happened today, because it's also important to check out where the money went. Not just that we're up and down. Remember, I said the S&P 500, that chart we were looking at represents the 500 largest companies by market cap. Those companies are in every industry in the economy, and all of the industries don't move exactly alike. So although you may see on television that the market is down, that doesn't mean that every stock is down. It doesn't mean every industry is down. Usually, every company belongs to an industry, and the macroeconomic environment will favor some industries and punish others. So just as a shorthand, they'll tell you that the S&P and Dow is up or down. But to really know what's going on, you got to look underneath that major index, which includes every industry, to see what's going on. So looking up under the hood, we see today the big winner today was real estate, but this is not really commercial. This is not like residential real estate. This is full of the big winners were companies that own land, like, let's see, like cell phone tower companies. Another one was a company called Warehouse. They do a lot of forestry stuff, and they, of course, paper and like McDonald's is actually big in real estate, believe it or not. A lot of people buy McDonald's because they own and most of the land that the McDonald's sits on, they own the store. There was a great movie, sidebar, about Ray Kroc, that I highly recommend watching that movie. That was an awesome movie. I think you may or may not know, he is not the inventor of the McDonald's franchise. There were a couple of they were not a couple of owners who were brothers, not as in soul brothers, but they were siblings. Maybe that's what I should say. They were siblings, and the McDonald's siblings owned it. And yeah, so Ray Kroc is a very good story, a lesson about marketing and being a visionary and thinking outside the box. I highly recommend looking for that movie. It's what is the guy that played Michael Keaton played Batman? He starred as Ray Kroc. Watch that movie. Awesome movie. Let's see. Also, the big winners today was utilities. The reason why I really wanted to show you the list, I just really wanted to concentrate on a couple of these. The main one being utilities and energy. As everybody knows by now, I'm dollar will. I trade dollar centric things, and one of the things that's highly sensitive to the movement of the dollar is energy. Okay, energy in this case is like oil, natural gas, coal, that kind of thing. Utility companies, that's utilities in this sense, in this category, that's your company, where you pay your electric bill. It gives you the light and the electricity in your house. Okay, so utility companies need energy to run. So when energy gets cheap, utility companies make a lot of money. So that's because the substance they need to run their business is getting cheaper every month. Your bill doesn't necessarily get cheaper, or not by any large amount, because by the time they add the taxes to it and all that, you don't even really notice it. But as the energy gets cheaper, utility companies make profit off of the fact that what they needed. Their overhead is lower month after month and quarter after quarter. So for as long as that trend continues, the utility companies do well. So this is a pattern I expect to see. Like, if this downturn, this bear market trend is the real deal, I expect the utility companies to continue to do well. I'm gonna take you back to your childhood of playing Monopoly. You start out with a lot of money, and you want all the sexy stuff like Boardwalk and Park Place. As soon as you get in trouble, you start buying those daggone utility companies because people are always landing on them, and it gives you a steady flow of cash. Well, they designed that game Monopoly like that because that's how it is in real life. Everybody's got to keep the lights on, got to stay warm in the winter and cool in the summer, and got to cook. So it's like a necessity for life. Whereas people may not always be in the mood or have the money, the resources to go to Boardwalk and Park Place and shop at those high-end retail places. So there's a time for the wasteful, conspicuous spending. Buying your name brand products and your luxurious cars and taking vacations on flying first class and going on yachts and all that stuff and flossing, and that would represent the Boardwalk and Park Place and all of those I guess the floss that's in this category here called consumer discretionary, means stuff you don't need. Stuff you like, but stuff you don't need. Okay, that's all that stuff at the mall. Okay, and so these are the things that are hurting. The stuff at the mall, stuff you don't need, industrials, financials. Okay, because these companies get loans from banks to create all that stuff you don't need. And then energy, of course, is hurting because the dollar did kind of go down, did have a down day today, but overall the trend for the dollar is higher. And so that's stressing energy. And it's telling that although the dollar had like a pretty nasty move today, energy still went down because everybody kind of sees it now that that was just a minor pullback for the dollar in an otherwise uptrend. And it still didn't end up positive for energy. So nobody's quote buying buying it. Everybody took the opportunity to get out. And so the only other thing on this list I want to really bring your attention to is this: consumer staples. And it is what it sounds like. It is food. Okay. That's another one that's interesting to watch. For example, in the news today, let's see. Where is it? Oh, they didn't talk about it. I don't have an article for it. This is Walgreens. It's a drugstore, Walgreens. When the economy starts slowing down, big companies look for places, companies that are in like the retail sector, things that's related to advertising. They look for some ways to make some safe, stable money. And that takes them to food and drugstore. And so the Walgreens, a private equity firm, is raising some money to try to buy Walgreens. And Walgreens is ready to rumble. It's ready. This chart looks beautiful. This thing is good to go. And we're looking at a monthly chart that goes all the way back, in this case, to 1988. And it's had a significant downturn. It's been trending down since August of 2015. So like 3 years, and it got down and went below a prior resistance. And now it's ready to go. This is money. And it was over bought, and now it's deeply oversold. It was so deeply oversold. If you look back on this chart going back to 1988, it had never reached these levels. So we're talking about 30 years. It had never been this oversold in 30 years. Okay, so it was an extreme bargain. And so some company, they're trying to buy this. Now, if you may recall Jeff Bezos from Amazon. Amazon is selling discretionary items, stuff you don't really need. And he knows, he's a smart guy, that whole sector is going to lose money when people start getting laid off. They're not going to be buying all this stuff they don't need from Amazon. He knows that. So what did he do? He bought Whole Foods. So the money that he loses on Amazon, he's going to Amazon and the Washington Post, because that's he's going to lose some money on that too, because advertising budgets tighten up when the economy slows down. Companies don't spend as much on advertising. So he's a brilliant man. So he said, let me buy a staple that people have to have, food. So he's gonna, his money he loses on the Washington Post and Amazon is going to be offset by the money he makes in food. And he's going to be trying to ship food via Amazon, online food sales and stuff like that, direct to the consumer. So he's ahead of the game. So the point of it is, that's the same playbook that this private equity firm is using to now that they that's why Walgreens is attractive to them. So you're going to see this play out a lot. You're going to see a lot of food companies get bought out by bigger companies. I'm still waiting on Apple to do something. Apple has a huge amount of money. They got to do something with it, because if they don't, that money is just going to disappear as all the tech stocks that went to the moon. Big money. They're going to rotate. They're going to rotate that money. The big money managers are going to sell all that tech stuff, and they're going to move to this food space and some other spaces that I'll get into. Y'all are getting the bonus today. This is usually stuff I only talk about on my Patreon group. So I'm feeling charitable today. But I can't promise you that I'll always do this, so bring out these sexy charts like this to show where the real opportunity is. Can't promise that I'll always do that, but you know where to get it if you want it. Join my Patreon. All right. Also, another trend you'll see happening is CEOs will start to leave. They'll start voluntarily stepping down, because who wants to be on a sinking ship? When the economy starts slowing down, and these companies that are, let's say, high PE, price to earnings ratio, basically companies that make a lot of money, the stock is priced higher than the earnings can really justify, because the stocks are so popular. They call those high PE ratio stocks, high stock price relative to the earnings. The price of the stock relative to the earnings of the company is high. That's what that means. And so that premium starts to get taken off as everyone comes to realize that the economy is slowing down. It's like, well, wait a minute. If this company's, Google in this case, is surviving a lot off of advertising dollars, and yes, YouTube is owned by Google, okay, then we can't rationally expect their earnings in the future to look as strong as their earnings in the past. So if the future doesn't look to be or project to be as bright as the past, why am I paying this premium? So you're going to see a lot of wise CEOs take the golden parachute and get out of Dodge. That way they don't have to get blamed. They can say, well, when I left the company, it was sitting at the top. They'll come back in 3 years and take over the same job they used to have, but they'll get some fall guy to sit in the chair and keep it warm and take the blame for the decline. You're going to see a lot of, because these CEOs have to go out and make these speeches every earnings, and they have to come up with some. This is to the fundamental crowd, the fundamental investing crowd. They want to know. They want to hear a reason why the market is going down, and just saying that it's related to the macroeconomic issues, that's not good enough. Okay, so the smart CEOs know to get off the ship right now, head for the exit. Come back when the stock price has been completely destroyed, and then you get to walk in the door with a cape and rescue the company again as the macro economy is gearing up for another uptrend. So you can come in like Batman. So watch this. Just watch it happen more and more. You're going to see companies, like I said, buying those grocery stores and things in the consumer staples space. You're also going to see more and more people step down, flee. Let's see. That's kind of all I had. Let me see who's rocking with me today. Okay. Take a look over. Oh, what's up, Raymond Woman? Dre Raphael in the house. CR Frank, what's happening? So, are you guys paying attention to these charts? Are you making your appointment to talk to people in your that control your retirement account at work? You sit down and talk to them. Ask them what they think. Ask them what what should you do. I recall the last downturn. What I did, I took my money. I left it, of course, in the account. You never want to take it out of. We don't want to withdraw money from the account. That's devastating. Again, this is just me saying what I did. None of this is advice to any of you. Okay, this is not advice to any of you. Okay, because I'm just some dude on YouTube. So don't let me be the source of your advice. This is just my opinion. This is just for entertainment purposes. But what I did was I kept contributing to the account. That's one. That was the main thing. But I also moved my old money and my new money to just a money market account. Just a money market account. I made, I didn't lose anything, but it grew like molasses, but I didn't lose anything. The good thing is when the market got to the bottom, you're sitting there with a big whop of money, and things that used to be $100, it's going to be $2, $1 and $2. It's going to be that bad. And if you have a nice amount and you're buying stuff at $1 or $10, it used to be $100. That's how you get ahead of the game, especially for the millennials out there. This is their come up. This downturn in the economy is like the greatest thing for them. if they learn how to read these charts and go get the information and make a plan, these downturns in the past 2 to 3 years. I don't think we've had any last longer than 3. Okay, so but it happens quickly. It takes giant steps like that gap down I showed you on the chart. So this thing, it moves faster than we can imagine, because in our minds we think that, okay, it took a year for this market to move a certain distance, but prices fall faster than they rise. The saying in the industry is prices take the escalator up or the stairs up and the elevator down. So it was nothing to wipe out 3 to 6 months worth of gain in a couple of weeks. That's how aggressive price declines. But psychologically, we think that, well, I looked at the prices a couple of months ago and I got time. I don't have to, get to this tomorrow. And then when you look at it, you go look at a chart, you go, whoa, how did it wipe out this much so fast? That's because prices fall faster than they rise. And also think back to that volume divergence I showed in the beginning of the video. If you missed it, check it on, rewind and check it out. It showed the volume slope going down and the price going up. Well, when that small number of people have no interest in that stock, there's no support. The masses are not present to catch it when it falls. So it just falls. It just falls until somebody catches it. Let me see what we. Oh, it's Raphael said, I got to hop on. Yeah, come on over, man. And I provide a lot of one-on-one, so you can get individual one-on-one hangouts, and I'm into it to the degree that you're into it, Some people are very active, and some others they're busy with other things, and they might be more long-term traders, and some are primarily supporting me. So, and I appreciate that too, So let's see. He said, I always get looking forward to bear market, especially Bitcoin. Oh yeah. See that Bitcoin thing. Yeah, people took it personally when I told them, this is before it tanked at 20,000. I said, it's too new. I'm gonna wait. The price rise was too steep, and as an experienced trader, we don't chase. We wait and let the price fall and come back to us. There's always another time. There's always something else to invest in that's a better risk. And I knew it. I said it's going to fall, and when it does, I'll be ready for it then. But what I don't like about Bitcoin is that it's the symbol is BTC/USD. So it's a relationship between Bitcoin and the US dollar. So if the dollar is trending higher, then that's going to be downward pressure uh, on Bitcoin or anything quoted as paired with the dollar. So because I'm bullish the dollar, I'm therefore bearish Bitcoin. But there will come a time when I will be bearish the dollar. And at that point in time, I'll be interested in looking at Bitcoin. But we're not at that point. We're not there. We're good ways away from that. This dollar has a good way to go. Let me see, I'm trying to read the charts. Learning the chart. Oh, okay. Trade. Okay, so you've been day trading. Okay, cool. I hope you are did you put in some time on simulation? Because there's no sense using real money. You really gotta have the principles down if you're gonna day trade. A lot of people want to day trade. Day trading is the hardest thing you can do. It really is. So you got to have the skill level to do it. I'm not talking down day trading. I'm just saying you have to really, your game has to be tight. Your chart game has to be vicious, you know. And I'm a very good swing trader. I'm trying to get better as a day trader. It's a different frame of mind. And I think I'm making what am I trying to say? I'm at the point of maybe of throwing out the idea of me being a day trader. I think I'm gonna find a middle ground between swing trading and day trading. Because the whole premise of day trading is to be in cash at the end of the day. And there's just too many opportunities left out there that there's no reason. I can accept the risk of staying in to catch the majority of a trend. So especially with me being an Elliott wave theory trader, so my mind is kind of already biased in a particular way. So trading in and out of something on a day, it seems like a waste to me. If I can do all this work and find something that's about to get into a trend that might last 3 or 4 weeks, I'm like, why not take the whole 3 or 4 weeks, you know? But all the styles have their place, and that's what makes a market, because people are buying and selling for different reasons, and they can you can have two technical traders and they both can be competent, but they can have different trading styles, different trading objectives, and one can be buying when another one is selling, and they both can be right. Okay, so you gotta find your style. All right, let me see what else we got here. Let's see. Look forward to it. I always tell people to not let the downtrend. Yep. Always tell people to not let the downtrend fool you. It's always an opportunity for a great hike up the mountain. That's right. I mean, there are actually traders who their entire style is to look. They trade. They look for things that are overbought and they short it because of what I said earlier. Prices fall faster than they rise, and so they get real good at that, finding those opportunities. And when something takes a big drop over a week or two, it might lose 15%, 10%. That's their entire style. Looking for something that's fat and happy. Let's see. Oh, okay. I see this. I don't want to mention this other company on here. I have nothing bad to say about this company, Dre Raphael. I've seen a good number of their videos, and I think it's just the Nobody asking my opinion. I'm gonna say it anyway. I've seen some very good traders in that collective, and then I've seen some that, you know, it depends on the tribe you with, you know. So, um, like a lot of things in technical analysis, there are many ways to win. You know, you just have to be good at your strategy. Okay, so you use demo account so far only made. All right, man, that's good. You didn't lose, man. What do you mean you only made $100 profit? You didn't lose. Shoot, man, you should be. Cheers to you, brother. You know, cause believe it or not, losing is part of it. Losing teach you some discipline. So the fact that you got a profit, man, that's awesome. That's awesome. So that means you're pretty disciplined about getting out when it's not going in your favor. That's great. Oh, he said not have the same thoughts about day trading already. Yeah, yeah. It's again, there's nothing wrong with it. You just have to know your personality. And there's a lot of stress with it. You have to be very disciplined. You have to get up every day and look for that opportunity. You got to do your scans of the market, and every day it's a it's like every day is its own game. It's like playing a game every day. I don't mean that trading is a game, but I mean it's a new contest, a new challenge every day. You gotta find that opportunity that day. Go out, secure that opportunity, and then tomorrow do it all over again. You know. All right. No, my bad. I don't mean. All right. All right. So I am going to, unless somebody wants to hop on, but I think I'm going to go ahead and shut it down. I think maybe if I open it up, do another one like during the day, then I'll open the panel up, see what's especially for my traders out there. So yeah, I definitely I want to chop it up with some of the traders, just see what you trade, what style you use. So, next time I'm live, be prepared to come on and share that kind of information. You know, I'm not evaluating, what people do or anything like that, or judging. I just like to see that people are getting involved with capitalism on this level, and we definitely need to spread that among our community. That we got to get in it and get this money, because this is where it's at. I mean, I ever since Warren Buffett, I heard him say I was in my 20s, early 20s, and he said trading is the greatest business in the world. You don't need any employees. You don't need any products or inventory. He said it doesn't matter whether you're a man or woman, tall or short, skinny or fat, young or old. I said, that's my industry. I was at a job I wasn't crazy about. I mean, I love the job. I didn't like the politics around it. Y'all know what I'm talking about. That ism we got to deal with. And I'm like, I got to get saved from this. And I heard Warren Buffett say that. I said, I got to learn that. That sounds like the job for me, the industry for me. You can win when the market goes up or when it goes down. You can live in a part of the country where the cost of living, or world where the cost of living is low. You're not tied to the local economy where you live. It is the perfect business, and you can teach it to your family, friends, your lineage. And it's as long as there's an opportunity to trade the markets, then that opportunity is there to be free. It doesn't require that you have a college degree. It doesn't even require that you have a high school diploma. If you're smart enough to understand the concepts and discipline, enough to execute them, then you can do it. But not trying to sell too much of the hope. The failure rate in trading is like 80%. 80% failure rate. So I tell people it's doable. I'm not going to say it's easy, but it's doable. If you're persistent, you can get it. You can get it. It's just it's a tough nut to crack in the beginning, because you have to overcome what you've been taught. Their assumptions. Everybody thinks they know how the stock market works and how money works. I don't know how people, because people think that because they have experience spending money and going to work every day, that they know how the system works. And you have to overcome that you really don't know. You don't know what you don't know. And once you overcome that, you go, okay, I just have to submit to this and throw out what I used to think, and go with what's real. And let's see. Our Frank says, can just sit behind a computer screen, flash phone, incognito. Yeah, you can. You can. It's hard to do that in the beginning. Like I was saying on yesterday's show, if you're trying to teach yourself, you can waste a lot of time sitting there making the same mistakes over and over and over. So I'll say to you guys, even if you don't come join my Patreon, find some chat rooms or some tribe of some sort that's trading regularly that can hold you accountable. You go and say what it is that you are trading, and what your plan is for when you expect to get out. If it drops below a certain level, you're going to get out, and have some group hold you accountable. Sometimes just writing it down in a form where it's there. You can't take it back. It's just something. Sometimes just that is enough to make you be mindful that you basically BSing yourself. You get people, they start out as a day trade, then it doesn't work, and then they say, well, it's a long-term trade. No, you just made a mistake. How about just admitting that? How about that? But I think I'm gonna hop on off. Thank y'all for riding with me. I'm gonna try to be a little bit more regular, and like I said, if I do this during the day, I'll open it up and we can chop it up. Peace.